past 24 hours have seen the biggest crash in crypto history. Bigger than the pandemic dump, bigger than FTX and Luna, whatever you call it. This was the biggest liquidation cascade event that crypto has ever seen, with $20 billion taken in liquidations. Some altcoins went down 70 to 80%. Trump announced 100% tariffs on China, and the stock market started to plunge towards the end of the Friday close. Trump then announced another tweet regarding the tariffs. The VIX spiked, and then the crypto markets capitulated. And we believe this could have been a planned attack against the leveraged traders. So I hope you wasn't leveraged. I hope you haven't lost any money. And if you were spot holding, or if you was managing to buy that dip, it's still a good buy the dip opportunity in my eyes, because this bull market is not over. And we're going to go through that today in this video. So here we go, absolute bloodbath of a week. So for the week, Bitcoin is only down 8% now. It was down a lot further last night, as with all of these were. So for the week as it stands, Ethereum down 15%, Binance coin down 1.6%, XRP down 17%, Solana down 20%, Tron down 6%, Dogecoin down 22%, Cardano down 20%, Hyperliquid down 17%, Chainlink down 17.6%, and Sui down 21.9%, and Avalanche down 25%. It's bloodbath all the way through the crypto markets. Zcash still up 97% for the week. So probably some of the best gainers this week are Zcash, yes, and a few others there. Potenza still in the green. Trust Wallet token up 4%, and Meme Core up 5.6%. Don't even know what Meme Core is. Okay, let's move on. So Bitcoin. Okay, so Bitcoin has wicked down as low as $103,000 last night. Now sitting at a price of 111,000, just about to touch 112,000. Okay, it's been sitting around there. Okay, the recovery of this candle on the weekly chart is now back up above where the 21-week EMA is, which we have been looking for support over recent weeks to months. Okay, and it is also holding above this trend line again. So we're really going to be looking for what the weekly close is saying on Sunday night. So we'll check back in on it again on Monday and see where we're at. But like I say, this is not something to say cycle's over, in my opinion. And with these types of events, you do have to refresh what your morals and what your rules are within crypto. And here's Julian Bittle from Real Vision stating some of the important rules of engagement for crypto. And that is no leverage, no FOMO, top 3 to 5 assets as a main bag, self-custody, only hold or only trade a small degen bag, hodl over a long time horizon, zoom out and remove the noise, expect 20 to 30% pullbacks frequently, and BTFD if you can. We've had 7, 20 to 30% corrections in this cycle. Feels rough in the moment, but when you zoom out, even with the current 17% pullback, Bitcoin is still up over 620%. Perspective and patience is everything on days like this, and that's true. And it's fair to say there is fear in the markets right now. I'm seeing a lot of comments on X in particular, where people are fearful, people who have lost a lot of money. So I really feel sorry for those people. People who obviously either got too greedy or just a bit complacent and just took on too much leverage. Okay, because if you wasn't leveraged up, you wouldn't have lost anything. Okay, and that's the point of trying not to take that leverage. I know it seems tempting, but it can really ruin your whole investment plan, particularly if you put a lot of your own personal wealth in these markets. But yeah, the fear's been hit. Also seeing a lot of bears in the comments. People who were calling a local top and were going short on the market. Obviously, they've capitalized on their shorts and they've done well. But now that's giving them a massive ego, if to say that they think that they're geniuses, and they're going to call everything right. But it does not mean the cycle's over. Just because you've technically called a local top and you've made a good trade does not make them experts on the cycle at all. And a lot of comments that I'm seeing, they don't take into account the fundamentals, the economics of what's going on in the world. They don't take into account a lot of the cycle indicators and many other things that we look at on this channel. So fair play to them. If they called the trade right and they've won some money and made some money, perfect. Good for them. But don't start saying the cycle's over when you're not basing that on anything. You're basing that on a technical trade, what you've seen a chart pattern. Okay, you can't base your cycle thesis as an investor based on someone who's trading a certain time frame on a chart. It's not the same thing whatsoever. Like I say, you've got to take into account technicals are important. That's what we look at on this channel. But you've got to take into account economics, fundamentals, and many other factors. 19.37 billion taken from the crypto markets in the past 24 hours, and 16.86 billion of that was longs. Okay, and this only accounts for the leverage on the major exchanges that CoinGlass gathers its data from. This does not include people on DeFi, who've got crypto loans, where their LTV has been hit. They've been liquidated too. So I think this is way bigger than what we can piece together right now, but I'm sure some people will be gathering that data. And they're also going to be looking at, who was liquidated. Some of these billions might have been certain entities losing, a billion plus in one trade, maybe, or not in one trade, but in one position or holding or something. So you never know, or if not billions, like hundreds of millions in certain positions. So it could be market makers. The market makers also play against each other, okay, and they know where their positions are at sometimes, and they purposely wipe each other out. So something like that could have happened as well, but we'll find out more news on that as the days progress, no doubt. And this is the tweet that caused the damage, supposedly. But as we know, markets like to take news stories to play out their strategies and plans. Okay, it's quite possible that this was a coordinated attack on the leverage from major exchanges and market makers. Okay, so all they need to do is they wait for a news story or a moment, and it comes in the form of Donald Trump tweeting this around China. And one of the things that was telling me something was happening last night was I saw the VIX. I was literally just chilling out, listening to some music, looking at some charts, having a beer, in fact. I was actually going to go live last night, but I got interrupted, and then this happened, and I was like, "Whoa, let's wait and see what's playing out here." Okay, one of the things that I noticed was going on though early towards the end of the market close in the United States. And that was the VIX spiking. I saw it taking out these highs and heading up as high as this again. And it does this when something's going on. Obviously, the stock market was pulling back as well. Then I saw the Trump tweet, the initial tweet, or the announcement, sorry, on the news about the tariffs. And and then it was after this point, after the US markets closed. Trump put out that Truth Social post, and that's just from that moment. It was when all the crypto markets absolutely nuked. Bloodbath, ridiculous. Like I say, never seen. I've been in crypto since 2020, and I've never seen anything like that before. And as Quinton says, the COVID crash was 1.2 billion in liquidations. The FTX crash was 1.6 billion in liquidations, and last night or the last 24 hours was close to over 19 billion. It's probably 20 plus billion. It's ridiculous. And he says, you wished you'd bought during the COVID crash. This is your COVID crash. Okay, yes, well, some of the entries would have been perfect if you could have got them last night. but some of the exchanges were not allowing that to happen. Not, some of the exchanges were not allowing people to process. There was disruption, and here it is from Binance. Okay, we are happy to report that all services have been restored and progressively returning to normal. We are continuing to monitor the situation to ensure all operations continue running smoothly. We appreciate everyone's understanding. Due to the heavy market, so this is what they posted last night. Let's click on that. Due to heavy market activity, our systems are under high load. Some users may experience intermittent delays or display issues. We're actively monitoring the situation and working to resolve it. Funds are safe. Thank you for your patience. Someone just put CZ back in jail. The thing was, right, okay, I was using Binance throughout 2020, 2021, and a lot of this was going on back then. And it's not just Binance, it can be Coinbase and, a lot, but it's always the biggest exchanges that are not, you're not able to use them, not able to withdraw funds, not able to process trades, stop losses get hit, and they don't deactivate the trade. They just go straight through and to your liquidation point. That's why it's always so dangerous, that leverage trading. If you know what you're doing, risk manage. I mean, I would always say if you are a day trader with leverage, perfectly fine. If you're scalping, absolutely fine. People who are going and buying their positions, instead of buying spot positions, they're going into leverage, they're going into futures, and they're buying twice or three times or 10 times the amount of their position and holding it like it's a whole bag. Absolutely crazy. These market makers are out to get you, and they will get you. And Raoul Powell says, all of this is noise if you don't use leverage. There are only two questions you need to ask as a long-term holder. Will tomorrow be more digital than today? Has the liquidity cycle and business cycle topped? Or is it still rising to finance the 10 trillion that needs to roll in the next 12 months? He's talking about the debt there, the US debt. If both answers are yes, then it's all just noise. If your time horizon is 5 years plus, then the second part is just noise too. BTFD, and don't F this up. Okay, and it's true. If you don't use leverage, it is noise. If you've got a long time horizon, then yeah, none of this should worry you. The thing is, I would say I do have a long time horizon for investing, but I also know that there is a cycle at play here, and it will end at some point. And I do not want to be holding all my bags through the bear market. So I am monitoring things more closely. And yeah, look, the cycle's not over. I don't think the business cycle has topped. The ISM is still at its lows, and we're going to go through some other things in this video. But yeah, just hold on for now, because that's not financial advice, by the way. But at the moment, it looks like just panic wicks. Okay. And it looks like we're reclaiming some ground on these charts, which we're going to get into in just a moment as well. And Pomp says, if you were bullish on Bitcoin and stocks 2 days ago, you should be even more bullish now. None of the fundamentals changed in the last 48 hours. We simply got a healthy reset that wiped out the excess leverage in the system. Now the market is clear to go higher. And I agree with this too. Okay, I believe the leverage has been wiped. The cycle is still intact. The fundamentals are still there. The economics of rate cuts come in, and increasing money supply and the ISM due to go up, and all of these things tell me that the cycle is still very much intact. I mean, Ethereum's not even really broke all-time highs yet, and like I always say, Bitcoin dominance will not end the cycle at the highs. It will end it at the lows, probably around 40%. Along with the S&P, the Nasdaq took quite a dump down. Just to show that to anyone that didn't see it, the Nasdaq was down from the high that day down to the low in the last till the close, was down 3.89%. Not too bad, but a big move for the stock market nevertheless. Is the cycle still intact for the stock market? Well, these EMAs are daily EMAs and they haven't crossed bearish. Okay, It's did not even come down to the 50-day EMA yet. You've got these support levels here around 24,200 and 24, and it's at 24,220. See what happens on Monday. That's what I'd say. Let's see what happens with the stock market on the US Open on Monday afternoon here in the UK or Europe. And yeah, if we look at it on a weekly, you know, the EMAs are nice. It's just still a clear bull market. Yeah, that's not even taking out previous lows there at all. So all good in the stock market, really still. I think the impact was massively towards the crypto industry, to be fair, and that's why I believe, yeah, possibly coordinated attack in the market closing hours for the US markets. Crypto got heavily battered. Yeah, it's definitely not alt season at the moment, is it? And we're heading below the 50 level now, so looks like it's heading back down towards Bitcoin season. But like I say, hopefully we get a higher low here, and we can start moving up towards late Q4 with the alt season peaking there at some point, or like I say, it could be early Q1, Q2 of next year. But I believe the alts are going to start recovering from this wick down, and they already have recovered most of their wicks, to be fair. And yeah, but we'll have to see whether they continue straight up with a V-shaped recovery, or whether we're going to have to range around and build up some momentum again. A lot of power has been taken from the crypto markets this week, so it might take just a little while to digest it. We'll have to see. As I was showing on my previous videos, where the TVL was around 160 to 165 billion, somewhere near the Bitcoin all-time high. It's now down to 146.89 billion, which could just be seen as a healthy correction, as TVL does tend to follow price. Obviously, the value of the coins makes the TVL position more valuable itself. Okay, but still very much this is an uptrend. Is that low taking out that low? Not sure, can't get really close enough to it, but yeah, I mean, it's a little bit lower, but we'll see. Like I say, that's a healthy uptrend there, and we'll see how that goes. And don't forget, a lot of total value locked would have been liquidated in DeFi, okay, where people's LTV levels were hit. So yeah, that would wipe some of the DeFi TVL off as well. But also interesting to note here, you've got the DEX volume, okay, and the DEX volume, yeah, 33.35 billion in the past 24 hours. So a lot of volume there on DEXs. So Bitcoin dominance, okay, big spike up yesterday with or last night with the action, okay, and this is on the daily, okay. So this big spike went up to a previous level I had marked off perfectly. 63.49% is where it tapped, which the reason for me drawing that line there was all of these lows tapping it before, and then we saw, well, this is one of the points where we saw the big breakdown. Okay, not only that, the candle for last night closed just below the 200-day EMA. Bit coincidental that, and now the value of Bitcoin dominance is now dropping to 60.3%, below this 60.43% level, which is a support resistance level that I marked off due to this low here and this breakdown area here. And then we put it on the weekly, okay, and see where we are. Okay, now the weekly EMAs do appear to be turning back up. Okay, see where we get this weekly close. I'd like to see the weekly close below the 50-week EMA. Okay, and then if we can get next week to be dropping, that would be perfect, because that would mean that it was just like a retest of EMAs before pushing lower. That's the ideal situation, what I'd like to see. I'd also like to see it closing below this trend line here. I think that's been moved a little bit, but yeah, so yeah, looking good to see. Again, just with the altcoins, that you want to see them recovering most of their wick and coming back up. You also want to see this Bitcoin dominance coming back down. you don't really want to see Bitcoin dominance closing up here towards 63%, because then you're going to start looking at going, right, well, is it going back to 66%? Like I say, I'd like to see it below this trend. I was happy to see it below this trend line again, because that was the one we saw historically that we was watching to wait and see that break down. So just to wick up there and hopefully get a weekly close below this 50-week EMA. That's what we're hoping for. So keep an eye on that. If you want your alt season soon, that is. Obviously, doesn't mean alt season isn't happening if it goes higher. It's just we all want the alt season sooner rather than later, don't we? Looking at total free now, and total free, like I say, it's recovered its wick. And what I really like about this is that actually it's come back up. It's got back up against the 200-day EMA. Okay, it's got back up above this down sloping trend line that was resistance, yeah, and then it was resistance again. Then it broke out. Then it held it as support, but then failed, fell back in. Then it reclaimed it and then held it as support again and moved away. And this is where we were starting to get bullish. Yeah, we've started to think, yeah, are we going to break out of the highs here? And it did make new all-time highs, but it just found a lot of resistance there at 1.19 trillion and just below it. And then it's rolled over, obviously, into this dip that we had last night. Massive wick down to 765 billion, almost at the 800-day EMA. But then we've bounced back. We're back up above the 200-day, and we're back up against above this support, which is great. Okay, so this is looking all right for now. It's positive to see. Not saying we can't go lower first, but it's a positive sign to see certain areas, certain EMAs, certain support resistance levels being reclaimed. And now total free versus BTC. Where does that wick go? It nearly went off the page there. I thought it was going to come off my screen and hit me in the stomach across the keyboard. But yeah, all jokes aside, obviously we had the nice V-shaped recovery, didn't we, of total free versus BTC. Okay, now it's bounced back up. It's not reclaimed any of the EMAs yet, but it was kind of falling towards them anyway. It was already below the 50-day EMA. But it's just gone straight past the 200-day EMA. But it has, when it's bounced up, it has found support here and reclaimed it, this level here around 0.313. Okay, and now it's starting to move up. Can it take on the 0.337 level? Okay, I'd like to see it get above the 200-day EMA again. That would be great. And but as we could see, you know, these EMAs were kind of already starting to roll over as well on total free BTC. But we was already, before this dump, we was already starting to see a bounce in Bitcoin dominance, wasn't we? Because Bitcoin was starting to challenge 125, 126k, looking like it was ready for a breakout, a rally. And sometimes when you get a strong Bitcoin rally, you get a rally in dominance. Okay, and then when Bitcoin finds a resistance level and then starts to form a range, that's when you get dominance drop down and the altcoins start to run and take turns and everything. And that was what we was waiting for next. That's what I was hoping for was going to happen very soon. But unfortunately, this just looks like a little stepping stone that we've got to get through before the next stage of that we can see. This is quite a good one here. We've got total free versus ETH. Okay. So, and it looks like other altcoins are having a good bounce against Ethereum. Okay, so don't forget this is the top 10, excluding Bitcoin and ETH, but this is against its ETH pair. Okay, and what we can see, we've had the wick down, and the wick down to this. The reason I've had this line marked off in white was because this has been support and resistance for many other cycles. Sorry, let me make that up there where you can see it. Let me even turn that into the weekly. Okay, stretch that out. Okay, as you can see, this white line here has been support and resistance an untold amount of times. Okay, and it looks like when last night happened that we bounced down pretty much to that same zone. Okay, but we've bounced away. Total free has bounced away, and it's not only reclaimed the 200-week EMA. Okay, it's also reclaimed this level at around 257 billion. okay, which has been resistance here many times before and support many times before, okay. And yeah, I mean, looking not too bad actually at all. I think this is very positive. I think this means that we could start to see, as we get this recovery, a lot of altcoins in the top 10. So think what's in the top 10 except for Bitcoin and Ethereum and excluding stablecoins, obviously. So you've got your XRP, you've got your BNB, Solana. What else is in the top 10 at the moment? Dogecoin, I guess. Let's go back to CoinMarketCap. Okay, you've got obviously, yeah, Cardano, Dogecoin, Tron, XRP, BNB. Okay, so yeah, and I think if they're doing that, I think a lot of these other big caps will be doing a very similar thing. And we can see that when we look at the others chart. So let's zoom in a bit closer so we can see what's going on. Okay, so like we've been seeing with most of these charts now, we're getting quite used to seeing these huge wicks. Not that used to them now. I don't want to see them too often. Once in a blue moon will do me. And like we said at the beginning of the video, this is the biggest liquidation event in crypto ever. So if you've survived this, well done. You're now an OG, and you know what a big crypto dump looks like. So when you see people go, crypto's dumping and Bitcoin's down about 2% and Ethereum's down 5 or 6% and other altcoins are down double digits and they're like, it's dumping. Ah, that's a dump. This is a real dump, okay? A big boy dump. Okay, and look where it's bounced back to, okay? It's bounced back to this trend line, which I'll zoom out and show you a bigger picture on in a minute. And it's also got above the 800-day EMA. Okay, so we want to see it get up above the 200-day EMA. Now, the daily EMAs are rolling over, but we'll show you this trend line. Let's zoom out so you can see that. This trend line goes back to a long way. Where does it go back to? So this goes back to 2019, okay? And it's recovered back above it perfectly. Let's have a look. Zoom in again, okay? Wow, look. The price closed the day yesterday above it almost perfectly. Okay, and then today it's weak just below it, touched the 800-day EMA, moved away. These are quite bullish signs. Okay, these are bullish signs that a bounce could happen, or if not a bounce immediately, then just a, you know, we're not going to go much lower. That's the sort of sign I'm seeing, and that's what I class as bullish in my opinion. Okay, looking at it on the weekly. Okay, let's look at the weekly EMAs for the others chart. Okay, and it does look like they could potentially roll over some of these EMAs. You've got the 5, 13, and 21 with a 50 there. Yeah, I'd like to see a weekly close above the 50. That would be super bullish in my opinion, because then you've almost got like this W pattern and then a retest of the EMAs before moving on. That would be the most bullish outcome. Not saying it's definitely going to happen, obviously. Now looking at others versus BTC, and we're starting to see this similar pattern forming here where levels are being reclaimed. Look, wicked well below this sort of triangle pattern that we've got going on of the whole cycle. Okay, we know we've been in a massive downtrend and alts have been bleeding to Bitcoin for so long. You know, we're just living on the hope that, you know, there will be an alt season, and I'm pretty sure there will be, because it's just a natural stage of a cycle that the risk flow happens. You've seen that chart where it goes from half to alt season, yeah, Bitcoin, Ethereum, big cap alts, low cap alts. Okay, and you can see that in the charts by the way they lag. Bitcoin first, Ethereum next, you know, total free next, then others. Is they're all running behind each other. There's a lag, so you can see that risk flow is going to happen. When it happens and when it all actually takes place, I don't know. It could be in the coming weeks to months that we start seeing this turn around, but I'm pretty sure that that happens. Like I say, with Bitcoin dominance, will end the cycle at the lows. As part of the emotions of a cycle, you tend to always get, you know, the belief, the thrill, the euphoria, followed by the complacency, the denial, capitulation, panic, anger, fear, depression, all of that. All of those stages tend to always play out, especially in the bigger cycles. Yeah. And we're in the 18.6 year cycle as well as the business cycle. Okay. So, like I say, reclaimed that trend line. EMA's pretty still looking like they're rolling over bearish actually. So this could build up around here for a bit longer before breaking out, and then that would mean that you start to see alts actually really start to make moves over the next coming months. Okay, a couple of months, like say for Q4 hopefully. Okay, and if we zoom in on daily, just to have a little look, like I say, reclaimed that support resistance level too. And it's uncanny that all of these charts are doing such a similar thing. And this is a really perfect example here for others versus ETH. Okay, so we just looked at others Bitcoin. Now we're looking at others ETH. And look how perfectly, I mean, I haven't just drawn these lines in. These lines have been in for like months, okay? So if we zoom out and look at that on the weekly, okay, this was almost a perfect line as well. So this line dates back to September 2016, okay? And if I really wanted to stretch it out, I'm sure it goes to that wick there, which I can do, yeah. No, it doesn't quite, but yeah, there, and like I say, let's go back into it. Here we go, and it's the closing price of last night's candle closed perfectly above that line, and since then, today, we've been bouncing away. We do want to see the EMA start to turn, but like I say, could this be a W formation? This is what I'm starting to see with some of these charts as well. Sorry if I didn't highlight that on some of the other ones we looked at, but you've got your downtrend, you've got your rise up, touching the EMAs, testing them, coming back down, finding your footing again, with a closing higher low, yeah? Because that will be a close. If that closes like this, let's see for the weekly, yeah, you'll be talking about higher low closes, yeah? Despite this wick. Wicks do not matter. Closing prices do. Okay, so let's see how the closing prices come tomorrow night, yeah? Obviously, the DXY's closing price closed on Friday with the stock market, okay, at 98.85. Sorry, I'm on the 4 hour. Let's move that back to the daily, okay? And we had the spike up on Thursday, but obviously with Trump causing this disruption, okay, then obviously the dollar, has come down as well. And we all know he wants a weaker dollar as well, okay? So, like I say, now we're starting to make more lower highs, yeah, okay? So, I don't know if that will match up on a trend line on this chart, but, so it's going to be, no, it's nowhere near it. But, we've got these lower highs, yeah, okay, big rejection from there and coming back down below this support resistance level, it's going to find that probably as resistance to get back up again. So ideally, we want to see the DXY rolling over, and then hopefully we can get it back down to these levels that we saw in the previous cycles. Okay, like I said before in my previous videos, 2021, 2017, 2018. Okay, can we come back down there towards early or to Q2 2026? I think it's possible, but we'll have to wait and see. And one of the reasons why we might not see a Q2, Q1, bull market for next year is because we are what seems to be looking close to getting near a recession. Okay, we've got rising unemployment down here. Okay, similar to what we've seen before all these recession periods. Yeah. Okay. We had the short recession in COVID, okay, 2008, the dot-com bubble, all of these types of recessionary periods in the 80s and 70s, okay. And what you tend to see in all of these, and I got this idea from Henrik Zeberg, actually. This is very similar to a chart he shares. And, what you see is rising unemployment into Fed interest rate cuts, okay. So if you look at 2008, 2009, okay, you've got the Fed cutting rates, rising unemployment, recession, yeah. Had the same thing, COVID, Fed cutting rates, sharp rise in unemployment, okay. Dot-com bubble, yeah, cutting rates, rising unemployment, okay. And, you can see it on the rest of the charts. You can take a screenshot of that if you like. But yeah, so we are flashing recession indicators. Doesn't mean it has to happen in the next few months. It could happen 6 months from now, a year from now. These things can sort of stall out for a while. the writing's on the wall well before it happens in many cases. I mean, I'm sure many of you have seen the movie The Big Short with Michael Berry. Okay, Christian Bale playing Michael Berry. If you haven't seen it, go watch it. Brilliant film. But yeah, you can call a recession for a long period before it actually happens. And maybe that's what Henrik Zeberg's doing. But he is saying mania phase first. Uh, you know, we're in a bubble. Let's get the bubble, the peak of the bubble first before it bursts. And obviously, gold's been on an absolute tear. Okay. And I believe, as I showed in my other video, when I overlaid Bitcoin against gold, gold pauses, Bitcoin runs. Bitcoin pauses, gold runs, all that sort of thing. So gold's been having a run while Bitcoin's been pausing. Obviously, I know we had briefly had an all-time high while gold's been running, but it wasn't a convincing breakout, was it? It was just a tap of a new all-time high and then a rejection. Okay, so I don't count that as running. So yeah, with gold, I've taken these fib levels from running it from these lows to the high of 2011, and that projects out the 1618 at 2462, the 2618 at 3331, and the 3618 will be here at 4196, and it's getting close to it. Yeah, there's only a couple of $100 to go, less than that even, $180 more to go, which we could see a spike to next week, and then perhaps hopefully that might start seeing a correction in gold, which would then bring a rally in Bitcoin. But that doesn't happen quick. I'm not saying that that's all going to happen next week, but we want to start seeing the move starting to play out. And as I've indicated with the 18.6-year real estate cycle, this is the housing sector index, okay, the HGX for the US housing market. And we are seeing this double top, the lower high, okay, just similar to what we saw from 2005 to 2006. Then we saw the breakdowns into 2007, 2008, and 2009, where it found a bottom. Okay, this is an early indicator, this chart, to what goes on in the US housing market. And if we are starting to see this roll over, this is on the 3-day. Okay, we can see we are starting to lose the 50 EMA. We put that on the weekly, still holding it as support. Okay, so we're watching this quite closely now. Now, this coming down does not mean the stock market comes down. Okay, I showed that in a previous video how the stock market, the Nasdaq and the S&P, run for several hundred days after this had topped. Now, I'm not saying that they're going to run for several hundred days, but what I'm saying is the stock market can run longer than the housing market, and probably will run longer than the housing market, as it has shown in the last two 18.6-year cycles. Okay, how high and how far does it run? That's very unpredictable. All depends on the economics, and we're talking about such high time frame here. It's very unpredictable. Okay, but what it does show is that if this is coming down, stock markets are on borrowed time, and if this comes down, you know what happens when the housing market comes down? A recession. But in the near term, there's something to be bullish about is the ISM. Okay, because like I say, it's been at the lows under 50 for the longest time in history. Okay, looks like a first head and shoulders, as I've shown before. It's rising up towards 50 now. Okay, so we've got a higher reading over the last couple of months. We've been getting higher readings. So we went from 48 to 48.7. Now we're at 49.1. So, next month, early November, do we get the reading above 50? Okay, not only will it be above the 50 level, it will be above the 50-month EMA. Okay, and that's what we want to see. Then we'll start to see expansion, hopefully like we did in 2020, 2021, and 2016, 2017. Okay, and this is why Julian Bittle and Raoul Powell still seem to think we are early cycle. I sit on the fence with this. I'd rather just watch the charts rather than trying to tell people, that I think it's running out until 20 late 26, or middle of 26. I'd rather just watch the charts, because it could still, I mean, this thing could really just rocket up, couldn't it, over a few months. Look, if I stretch it out to like December, yeah, it could be like there. Like, look at these advanced climbs; they can happen quicker. So, like, this one happened in COVID quite quick. We go back, look at this one back in after the financial crisis. Okay, 2009, the bull run where it saw a rally from 2009 up until 2010-11. That was quite a big move and a strong move, but literally quite fast and up, vertical, So this could go vertical as well, and it doesn't have to go as high either. If we're going into a recession, maybe stops a little bit, like maybe like more like this 56 level than going up to 59 or 64, 65 as it did in other cycles. So, but the thing that we want to see, the bullish thing about this is it's probably going to go up, especially with interest rates cutting as well. It's probably going up. It's just a matter of time. Now, obviously, we've had huge news in the past 24 hours. So, yeah, I've covered this video more to do with the crash and just reassuring people that, the cycle's still very much intact. Anyone calling bear market, just don't listen. I mean, you can listen to them if you like, but just ask yourself, based on what? Based on some candles, based on price action, some local price action. No, you've got to zoom out, look at the bigger picture. Zoom out on your charts first of all, and then look at the bigger picture of what's going on in this space. I'm talking about the institutions. They're loading up, they're accumulating, but the ETF still coming. And like I say, with this is one thing that I wanted to cover in this week's video. I wanted to cover this, and I wanted to cover some of the top altcoins that I think are going to benefit from the institutional cycle that we're in. Right, this is the S&P, okay, cryptocurrency broad digital market index. Okay, so what they're doing, they're creating like an S&P index for crypto. Okay, and it's going to have various different things in it. It's going to have miners and all of that sort of stuff. Digital asset treasury companies, no doubt as well. But it's going to have a top 50 apparently in it. And these are the top 10 constituents by weight. We've got Bitcoin, Ethereum, XRP, Binance Coin, Solana, Tron, Cardano, Chainlink, Avalanche, and Hyperliquid. Quite surprised to see Hyperliquid in there because it's quite a new token compared to the rest. The rest of them are pretty much OG cryptos, have been around a cycle or two. Hyperliquid's just fresh for this cycle. I mean, I'd maybe expect to even see like Sui in there above Hyperliquid, but again, it's quite new, so I don't expect to see Sui there. I mean, there's other things I could imagine could possibly be there before Hyperliquid. So, but they obviously, they're weighting it. They want a little bit of different elements of risk. They'll probably find something very promising about Hyperliquid. Does make me think maybe I should take another look at Hype, because I don't hold it. I hold some of these already. I do hold ETH, sorry, I never call it Ether. I've held BNB in the past in 2021, but not this cycle. Solana, never held Tron. Cardano, I dumped most of my bag of Cardano not so long ago, but then when I realised that Cardano was almost definitely getting the ETFs, I've reallocated to a smaller bag of Cardano than what I had. So Chainlink, I've got, yes. Avalanche, I've got as well, yeah. But yeah, no, so it's good. So let's have a look at some of these coins right now, shall we, and see how they're faring up since last night's price action. So yeah, taking a look at ETH now. Okay, ETH held up pretty strong, to be honest. It came all the way down as low as 3,500. Okay, and it's starting to try to reclaim. Okay, it's holding above its EMA as well, still above the 21-week EMA, and then it's trying to reclaim the 3,870 level, currently at 3,830. So not far to go. Yeah, there's not a lot to say about this. I mean, it just looks like a healthy pullback or correction for ETH. Pretty sure that this can be bouncing back up and challenging all-time highs again in no time at all, really. So yeah, not too bearish on ETH at all. But like I say, it's trying to reclaim that level. I mean, some people could say that this was the level, maybe. But yeah, I mean, and then it's closing above it. If you're looking at that wick, I tend to look at candle closes, okay, and then that lines up with this candle closes as well, okay. So it looks like it could be, but like as well, look where the wick came down to, right there on the 200-day EMA. This is what we've seen in most of these charts. Okay, the wick stopped at certain technical places. The candle closes starting and stopping at certain technical places. So the structure is not too bad. Okay, so let's just keep monitoring. Yeah, let's watch where these weekly closes get to tonight. Sorry, tomorrow night. And Solana. Okay, Solana has stopped right where we'd expect. Look at this trend line. Then this trend line goes back to, so we're looking at this on the daily. This trend line goes back to, no, this one goes all the way back to 2021. Okay. So, yeah, it's, let's have a look at it now, zooming in closer. Okay. So, yeah, I mean, it's above there. The wick, it seems like it's dropping lower than the wick today as well, actually. That's something to watch out for. Okay, because it closed back up on this wick and got back up to almost 189. Okay, and closed above the 200 day EMA, but looks like this daily candle pushing down a little bit. Let's look at it on the weekly, and it's still within, it's still above the 50 week. Perfect. Okay, and yeah, there's nothing to concern myself about with Solana at the moment. It's still very much this uptrend, up above the EMAs. All good for Solana. Next, we've got Sui. Okay, and Sui was one of the ones. It's obviously It is my biggest holding. Okay, so I was watching it very, very closely last night. Okay, and this wick, ridiculous. I heard that on some exchanges, I think it might be Binance, that it went as low as 50 cents. Okay, I watched it go to. I watched this go. It was one of the charts I had open at the time it was all going on, and I watched it go down to here like 90, below 95 cents. Absolutely shocking. Wondering whether my bag was going to zero. Now I knew it weren't going to zero, but I was like, where is it going to bounce? And I was like, surely not. When you look back at it and you look at it with a wick, it's like, okay, that was a wick and it's bounced away. When you're looking at the candle actually pushing down, pushing down, yeah, it's emotional. But I try not to get too emotional with this game. I'm try not to. I feel like I manage my risk. I'm diversified across a lot of different projects. So if one particular coin, obviously it would hurt me. I wouldn't. I wouldn't enjoy that. But I would survive, and that's the way you've always got to set up your portfolio and your strategy within crypto, is to make sure that even if something happens to one of the projects you're invested in, something happens to one of the exchanges you're using, or if something happens to one of your wallets, you're not completely out of this game. It's staying in the game is part of the playing this game. Okay. Not just making money. It's about staying in, staying alive. Okay. And yeah, so the candle close, come back up to 260, which was brilliant to see the close on that. What a huge wick. And now we're trying to push up. He's tried to get above 280, found resistance there. And yeah, that's what we're waiting for next. Is it going to break 280 next, or is it going to break 260? Okay, I'd rather see 280, obviously. But we'll keep monitoring that. Just zoom out on the weekly, see what we can see. Obviously, it's dropped out from this downtrend here, okay, quite harshly, and it's below the 50-week EMA. So these are levels. We've got to start taking these levels one by one. And quite similar to Ethereum, really, XRP is still in quite a bullish condition, okay? Still above this 50-week EMA for the closing prices, okay? Well, we'll see what the weekly close is saying, okay? These 5, 13, and 21s are obviously rolling over, but that can happen when, getting the corrective periods sort of like this, you see, and then it can just push up again. So not too concerned about that. Just as long as it's holding above this 50, that would be good. If it can get above the 21 week, even more bullish for it. We look at the daily, okay. So, again, we've just seen a huge wick down, recovery, holding above this $2.30 level, which has been support and resistance a number of times before. So like we saw in many of the other charts, we're seeing important support resistance levels being reclaimed, and we're seeing EMAs being held or recovered, and bouncing at certain points. Why did it stop here? It come down just past this 800 day EMA, and then it just bounced back immediately. Okay, so let's move on. Now for Cardano. Okay, so I mean Cardano, we thought was breaking this downtrend. This is where I reloaded on some Cardano the other day. So yes, I am underwater at the moment, but that's all right because I'm used to it. I'm used to playing crypto. You get into position sometimes, and sometimes you have to sit through the red for a bit, but eventually they will recover and get you back in the green if you are buying strong assets. And I believe Cardano is a strong asset. I believe it's going to get its ETF. It's got a strong community. It's got lots of people building on it. And I believe that Cardano will do well eventually. So yeah, I mean, look, it's like a huge wick down. The bounce back up has reclaimed this level of 66 cents. Okay, we would want to see it reclaim the 50-week EMA. That would be a really bullish sign. It's nice to see it was well above the 200 week EMA. And if you see, let me just try this. Okay, so if I grab a trend line, go from there, that goes from wicks to the wicks. That's a bit of a coincidence, isn't it? That it's closed above where this trend is as well. Okay, like I said, we're seeing this a lot now. So it's gone back into its pennant formation that it was in. Okay, we didn't have marked off, but now we have marked off, and it's above the 200 week EMA. Chances are, that could be a fake out to the downside, holding it, then start getting back up again, and then moving on from there. Okay. So yeah, not too bad for Cardano. Still away from its all-time highs. So if you believe Cardano is going back to all-time highs, which I do, don't know where it's going to go beyond that. Maybe we can cover that a bit more in another video. But if you believe it's going up there, it looks good. It looks good. BNB token, yeah. Did anything happen to BNB? A bit of a coincidence, isn't it? And I'll remind you of, was it this? Oh, sorry, this, yeah. Okay, so I'll remind you of that. I'm not saying anything. I'm not saying anything at all. Okay, but the coin that looks the best after all what's gone on, fair play. It was already running into, price discovery, all-time highs, but this is the weekly candle for it. So let's look at the daily. Okay. I mean, it did come down away from its, all-time highs, I guess, but you zoom out on a weekly, like, yeah, you're gonna get bearish on this or not? I wouldn't be getting bearish on that. Okay, yeah, could have been a very good buy the dip opportunity if you believe Binance is going to keep steaming on. And we've got some fib levels marked out here. So the 1618 it's already been hit, it's at 1000. Okay, and then the 2618 is here at 1494, and 3618 at 1982, 4618 up there at 2468. So I mean, and in the previous bull cycle, we saw coins going well past their fib extension targets. Okay, I'm not saying that's going to happen again. I'm not saying it's that kind of cycle. It's been pretty slow so far. But nevertheless, I believe the altcoins will all have their turn. And where does this stop? I do not know. But these are some of the targets you could be looking at. And then we've got Avalanche. Avalanche again, big wick down. Yeah. It's trying to reclaim this 22.7 level. And like I say, some of these lines, I mean, I could really adjust them, because I draw them in quite rough, really. Okay. So say if it's there matching with these tops, And really, it's pretty much reclaimed it. You know, I can zoom in on the daily, but just first of all, looking at the weekly EMAs, they are rolling over. The EMAs, you know, it's fallen below 200 week, fallen below the 50 week. The lower time frame, the lower EMAs are rolling over, like your 5, 13, and 21. Okay, but then if we look at the daily, yeah, looks like that as well. Okay, there is a potential that AVAX could come down a bit. You know, it's finding that actually as resistance right now. You can see when you take it down to the daily, you can see that it bounced back up and it's found this area as support. Let's check it out. Yeah, some of that area around there is support resistance, I guess. Okay, and you can make it up there if you wanted to. Yeah, it all depends where you place that really, but yeah, it's kind of found that as support there, and then it's got that as resistance. So it's trading now between 20 and 22.60 at the moment. So we want to see this clear breakout of 22.78, okay, and then we can start to try and reclaim some of these EMAs again. I'd say it's been having a bit of a rough time really since mid-September. Okay, this was not you know, AVAX had a good run from like June. Okay, it had run up from like $16, $17 up to like 35. It had basically done a 2x since the summer. Okay, so it was having a bit of a correction anyway, and this really made it shit the bed, you know. So yeah, should be able to recover that quite soon anyway. So all in all, for the altcoins, they all look very similar. Okay, you know, they've got the big wick down. They're trying to reclaim certain levels, reclaim certain EMAs. And as we go into the weekly close on Sunday night / Monday morning, we'll have another look and see where we are. Okay, so you take a look at your charts. We'll catch up again and we'll go through all of this next week. So I hope you got some value from today's show. Yeah, just to show a bit of confidence that, you know, your bags should be okay. Okay, the cycle is still intact. The technicals look awful when you zoom into them on lower time frames, but when you zoom out, you see that most of them have bounced back to significant support levels. You can see EMAs on many of the charts, the stronger ones, okay, and the bigger cap ones such as your Ethereum and Bitcoin and, you know, Solana. They're actually doing relatively well here, okay. And we know that the lower market cap you go down, apart from, you know, your outliers, then they're just simply lagging behind. Okay, so we have hit a blip in the road, massive liquidation event, biggest in history. Well done if you've survived it without getting liquidated or doing anything stupid. Okay, you know, don't fuck this up, as Raoul would say. And BTFD, yeah, if you've got the spare dry powder. So good luck to you all, and fingers crossed. And we'll speak to you next week, and we'll analyze all these charts. Don't forget, like, subscribe, and follow the channel for more content like this.